While Western automakers retreat from electric vehicles, BYD is launching a full-scale invasion of North America. Today, dealerships opening across Canada, China about to become the world's biggest science funder, and the toy company that just made $5 billion from a fuzzy creature called Labubu. I'm Shrimpy, and this is China Tech Insider. BYD is moving fast to establish a physical retail presence in Canada, planning to open 20 branded dealerships within its first year in the market. The world's largest EV maker is already scouting locations in the Greater Toronto area. This push comes just 2 months after Canada slashed its 100% tariff on Chinese-built EVs down to 6.1%. BYD has hired an automotive retail consultancy to find locations across the country. 3 potential sites in Greater Toronto are already under discussion, with plans to expand into Vancouver, Montreal, and Calgary. The deal caps imports at 49,000 Chinese-made EVs in the first year, with more than half expected to carry prices below $35,000. For Canadian consumers, this is significant news since the Canadian EV market has been crying out for affordable options. China is on the cusp of becoming the world's biggest public funder of research, according to a new analysis. Government spending on R&D in China increased by 90% to $133 billion in the decade leading up to 2023. By contrast, in the United States, spending rose by just 12% to $155 billion. China's public spending on research is likely to overtake that of the United States in the next 2 to 3 years. The earliest likely crossover is 2028. Plus or minus 1 year. The United States has been the global leader in R&D investment since World War II, so China taking the lead would be a watershed moment. Chinese government spending on fundamental research more than tripled between 2013 and 2023, setting the stage for a new scientific hegemon. Chinese toymaker Pop Mart reported explosive annual growth, with revenue jumping 185% to 37 billion yuan. That's about $5.4 billion. Net profit surged 285% to over 13 billion yuan. The company's star product is Labubu, a fuzzy creature from the Monsters series that has become a global phenomenon. The Monsters series including Labubu now makes up 38% of the company's total revenue. However, investors worry the company is too dependent on this single IP. Shares actually plunged 22% despite the strong results, as the market fears what happens when the Labubu craze eventually fades. 17 different intellectual properties recorded sales of more than 100 million yuan in 2025. A Chinese-owned vessel has successfully transited the Strait of Hormuz despite the ongoing conflict. The Lucky Gas passed through the strait on Tuesday, navigating near Larak Island in Iranian waters. This makes it only the second Chinese-owned LPG carrier to pass through since the war began. Meanwhile, COSCO Shipping Lines, the container arm of China's maritime giant, has resumed bookings to Middle Eastern ports including the UAE, Saudi Arabia, Bahrain, Qatar, Kuwait and Iraq. Iran has proposed a pay-to-pass safe corridor near Larak Island, and Chinese vessels appear to be taking advantage of it. This demonstrates China's ability to maintain energy imports even during major geopolitical disruptions. A new analysis from energy think tank Ember finds that the global EV fleet avoided 1.7 million barrels per day of oil consumption in 2025. That's getting close to 70% of what Iran exports through the Strait of Hormuz. The shift is already happening across emerging markets. Vietnam hit 38% EV sales share in 2025, ahead of the EU at 26%. Thailand reached 21%, and Indonesia 15%, all higher than the US at just 10%. China crossed a major milestone, with EVs making up more than 50% of new car sales for the first time. At an oil price of $80 per barrel, China saves more than $28 billion per year in avoided oil imports thanks to its EV fleet. The bigger picture is clear: as EVs scale alongside renewables, they're reshaping global energy security. Western car manufacturers are making what experts call a profound strategic mistake as they pull back from electric vehicles. Cheap, well-made electric cars from brands such as BYD and Leapmotor are finding buyers across Europe. BYD overtook Tesla as the world's biggest EV seller this year. A former Aston Martin CEO warned, "The worst possible response is to blink, slow investment and hope the market somehow resets in their favor. It won't. Chinese carmakers have moved early, built real capability in batteries and software, and are scaling fast. If Europe hesitates now, it will hand rivals a structural advantage that becomes harder to reverse. BYD recently unveiled a battery with 600 miles of range that can gain 250 miles in just 5 minutes of charging. The lesson from history is clear: this risks repeating the error American carmakers made in the 1980s when Japanese rivals caught them flat-footed. That's your China Tech Insider for today. BYD expanding into Canada, China's science funding about to overtake America, Mart's Labubu making billions, Chinese ships navigating the Hormuz blockade, EVs displacing massive amounts of oil, and Western carmakers stumbling while Chinese competitors accelerate. If you found this useful, subscribe and hit that bell. I'm Shrimpy, and I'll see you tomorrow with more from China Tech Insider.